The future has officially arrived. Artificial intelligence is no longer just a science fiction project. We're starting to see some of the most powerful technology ever invented in the palm of your hand. For investors, this trend is a once-in-a-generation opportunity. There is absolutely no doubting that. But how can you profit? There are so many companies which talk about AI and AI enablement, but is it just a buzzword? Which companies actually pass the sniff test and will allow you to make lots and lots of money over the years to come? In the next few minutes, I'm going to walk you through a playbook that I know worked once before that can help you identify companies and ETFs to make money from this huge opportunity. This episode of the podcast is proudly brought to you by BetaShares. BetaShares is one of the leading providers of ETFs here in Australia. With over 50 ETFs already available here in Australia, BetaShares makes it simple and easy to get exposure to basically any market you might want in your portfolio, whether you're talking US mega cap technology companies, or maybe you're thinking of an income focus and you're thinking maybe let's play it defensive with some bonds. The betashares.com.au website has just what you need. Go and check out the range of funds available after this show. I've been investing in growth companies and technology for a very long time. I've studied some of the world's best investors, whether they're specifically focused on technology, whether they're pursuing research and development initiatives, or something else. What I've found throughout all of my reading and all of my research and investing is a concise way to look at investing in a high growth market. This book right here that I've got in my hand is The Guerrilla Game by Geoffrey Moore. This book was written and became popular around the time of the dot-com boom and obviously subsequent bust. This book lays out the most concise formula that I've ever seen for investing in high technology and high growth industries. And I know for certain that the frameworks laid out in this book encapsulate the strategies and processes of some of the world's best investors today. So as we go through and talk about AI, we're going to use this as a framework for helping you find companies, but also ETFs and other ways of playing the market. In the Guerrilla Game book, there were effectively 4 types of companies that were outlined. The name, The Guerrilla Game, signals the first type of company and the most important type of company that you want to buy. This is, of course, a guerrilla. A guerrilla company is a standard setter in a fast-growing industry. So I want you to imagine a company that has set the standard for what AI is today. As companies grow and as industries emerge around them, what tends to happen is that the leading companies in those industries tend to set the rules for everyone that follows. Good examples of this might be like Facebook, which kind of set the standard for social media, Microsoft, which kind of set the standard for desktop operating systems, or Amazon AWS, which kind of set the standard for cloud computing. These are all fantastic examples, along with popular names like the iPhone and Apple, that really helped enable an entire market to flourish. Importantly, all of us are looking for these types of companies in high growth industries, these gorillas. Unfortunately, they're hiding in the mist. You don't always see the gorillas when the industry is just emerging. So throughout this, I'm going to explain how you can try and capture as many of these gorillas, and in doing so, capture as much as the value that is created by exciting industries. The second category outlined in the Guerrilla Game are something called kings. Kings kind of have similar features to the gorillas, but with one notable difference. The kings tend to operate in a part of the industry that's very mature and unlikely to grow really fast. I'm going to give you an example of a king in just a moment, but I've already named one of them so far. The third category is a chimp. Think of a chimp like a small monkey. The chimps aren't as strong and they're not setting the standards of the industry, even though they might be a genuine competitor. So a business that really is playing second to the main game in town. A good example of this might have been like Twitter. Back in the day when it was competing against Facebook, clearly Facebook was the gorilla. The fourth category, and probably the second most exciting, are the princesses and princes. These are the emerging gorillas, or at least the companies that could become gorillas one day in the future. Think of Google search way back in the day. At one point in time, before it was a huge gorilla, That was a business that really had potential to grow. So that's the perfect example of probably what we want to try and capture as quickly as possible. When we think about the AI or artificial intelligence industry overall, I try to slice it up into different groups. This will help make it easy for you to understand which companies play in which subsectors, because no one company is probably going to dominate every single part of the industry. The first subsector is compute. This is where companies like Nvidia or AMD might play. TSMC or Taiwan Semiconductor is another example of a company that might play in the compute marketplace. This is kind of providing the bedrock of everything that AI is built on. Obviously, we also need to connect things. So this is where the systems and networking come in. Companies like Broadcom, which is a fantastic performer in many stock portfolios, is a company that kind of fits perfectly into this part of the market. Number 3, which is probably the most sensible way to play the AI thematic, is the cloud computing or infrastructure layer. These are the types of companies that sit underneath and enable all of us to connect to some of the most important tools that we use, which is number 4, the applications that are using and running with AI. Think of the most popular example as probably OpenAI's ChatGPT, or maybe even Claude by Anthropic. If we go one layer further, we can start talking about the companies that use the models and the technology underneath it. These would be companies like Snowflake, ServiceNow, or even Palantir. These businesses are using their AI learnings and algorithms against their own proprietary data and systems to provide a way better outcome to their end customers. Let's now dive into some of these companies and how they might fit into the Guerrilla game framework. Number 1 is one of the biggest companies in the world right now, which is Nvidia. Trades under the ticker symbol NVDA. Nvidia creates GPUs and chips. One of the insane things about Nvidia is that it was founded in 1993 and it is still today growing its revenue at over 50% per year. This is a huge company that once upon a time was focused on video game cards and had fierce competition in the late 90s, and today is one of the biggest companies in the world. This is obviously playing in that compute and lower down infrastructure part of the market. Another established gorilla is Microsoft. Microsoft, not just through its partnership with OpenAI, has a huge ecosystem and network effect around it. Arguably, Microsoft is probably one of the most powerful companies in the world, given that it controls a lot of government systems, a lot of business systems, and a lot of personal computing as well. Through popular applications, games, and so much more, Microsoft has enabled itself to benefit from AI in 2 primary ways. Number 1 is it enables OpenAI's ChatGPT through something called Copilot to interact with its users and customers each and every day. The other way is through Microsoft Azure, which is one of the world's leading cloud platforms. A lot of AI applications and systems run on top of Azure, enabling it to benefit, even if it's not making the applications itself. Number 3, the third gorilla is probably a bit of a contentious one, which is Alphabet, another gigantic company throughout the world, and obviously the owner of things like YouTube and Google Search. It also owns Gemini and DeepMind. Similar to Microsoft, but probably not as mature in its marketplace just yet. Google has entire workspace apps. It obviously is in schools and universities, and it uses that data to present search results using AI, but also increasingly in business applications like Google Sheets and Google Docs. This tool enables businesses to run more effectively. And of course, Google also has one of the world's leading cloud platforms in GCP, a huge platform that enables companies like huge organizations to build tools and move their entire systems to the cloud and run advanced analytics and diagnostics. Founded in 1987 by Morris Chang, TSMC is arguably one of the world's most strategically valuable companies. Based in Taiwan, this is a pure play foundry company. This is where things get made. The chips get made that go into your iPhones or so many other devices that you need to run an AI program. TSMC was once upon a time invested in by the likes of Warren Buffett and so many other famous investors because its competitive advantage is so wide that it's created massive competition between the Chinese and US governments who are competing to try and be there as number 1 in this emerging and undoubtedly important AI industry. This next company fits into the Kings category, although it's probably debatable whether this should be in the gorilla category itself, which is ASML. ASML is a European-based company or headquartered company that provides lithography machines. Think of these machines like the size of a bus as giant lasers that help etch into chipsets all around the world. These machines enable the businesses and the kind of foundries to ultimately create the products that we need by using a very rare and very hard to find technology that only ASML provides. While the business is undoubtedly growing fast, it's debatable whether this business is in a state of being somewhat mature, given that it's been around for quite a long time. That said, ASML is still growing really fast with revenue well into the double digits, so you could probably consider this one a gorilla as well, but who knows what the future holds for ASML. Next up is the Princes and Princesses category, and there are 4 companies I want to tell you about. 2 private, 2 public. These companies are demonstrating huge amounts of growth, but it remains to be seen if they will ultimately set the standard for the industry. I'll let you decide. You can let me know in the comments, or if you want to write into me. The first company is Palantir. Palantir was founded by a fellow by the name of Alex Karp and Peter Thiel, who you may know as the co-founder of PayPal. This company hasn't been on the stock exchange that long, but Palantir has wasted no time. This business fuses AI with data to get really good decisions. Effectively, militaries, governments, and large corporates can use Palantir to draw in complex data sets and systems and make really intelligent decisions really fast. This business kind of prioritizes really streamlined systems and solutions for organizations that frankly would never have a chance to do it themselves. So Palantir is growing wicked fast based on not just the thematic of AI, but also the bureaucracy that goes into so many governments and large organizations around the world. Another company that you may have heard of is Snowflake. Founded in 2012, Snowflake again takes large data sets, puts it in the cloud, and enables really efficient and really effective decision making by the people that matter. Snowflake can take unstructured data into its database and enable really smart and intelligent decisions. And with AI, can effectively pull together all those data systems and different pieces of data and enable organizations to make better decisions. This ultimately will lead to much better outcomes for the end customers. The next 2 companies I want to tell you about, you might debate with me. These 2 companies sit in the private market, meaning that they're not separately listed on the stock exchange. However, you can get exposure to them in 2 easy ways. The first company is obviously OpenAI, which, as you know, is the creator of ChatGPT, arguably the only verb in AI right now. Remember when we say, just Google it? People are now saying, just ChatGPT it. When a company becomes a verb, I always think that it's more powerful as an investor signal and has very strong consumer appeal, which obviously creates enormous network effects. The crazy thing about OpenAI, and what probably a lot of users don't understand, is that it's actually built basically for developers first. So developers can plug into it, hence the name Open, and use the APIs, hence the phrase API, so you have an open API structure. This enables the actual machine learning and the AI model to be used by developers in their own apps and tools around the world. This is like an iPhone, which enables developers to build apps on top of the iPhone ecosystem, enabling the developers to make money and consumers to win. OpenAI has done this with so many other amazing tools and enabled developers to unlock potential across their own apps and ecosystems throughout the world. OpenAI is obviously privately held, so the only way that you can really get exposure to it is either by working there or by buying Microsoft shares, because Microsoft took a big stake in OpenAI quite a few years ago, enabling OpenAI to benefit from another network effect, which was the entire Microsoft ecosystem. A company that is quickly emerging in the ranks of language models is Anthropic, and in particular, the tool named Claude. Many people believe Claude has an advantage over OpenAI's ChatGPT and related tools for a variety of reasons. But what you may not know is AWS, which is a company owned by Amazon, did back Anthropic early days. So in a very roundabout way, if you buy this gigantic company called Amazon, you might get a tiny little bit of ultimate exposure to a business like Anthropic. Obviously, there are other models and tools available in the market right now, like xAI's Grok, Facebook's Llama, and also DeepSeek, a new model out of China. So there are other ways to play this. So let's talk about some potential chimps. I've probably got one big one for you, which is IBM, or International Business Machines. Despite all of the government support for IBM, it has, fair enough to say, fallen way behind the pack when it comes to things like chips or even a play on AI. While the jury's still a little bit out, it's safe to say companies like this are facing significant headwinds when compared to these other more innovative companies that are already at the front of the curve, which, as the Guerrilla Game book lays out, is an important thing to understand, is to know which companies you should not invest in, as well as when not to invest in them. One of the key learnings that I took from the Guerrilla Game book was this idea that you don't necessarily need to know which companies are going to benefit at the start of one of these mega trends. What you do, however, need to understand is when to invest. When you go through the different cycles in the stock market, you'll begin to realize that there is typically a hype cycle, and then there's actually this kind of gulf of despair, and then you come back to what is probably a more structural and sustainable growth trajectory for these industries. One of the easiest ways to play a new theme, and one of the things that wasn't really popular when this book came out, was actually the invention of ETFs. While ETFs were definitely around at the time, exchange-traded funds now enable you to take an entire basket of companies, and ultimately, as over time, the companies that are underperforming get shaken out of the ETF and the good companies rise to the surface, you ultimately get more and more and more exposure to the companies that are winning and keep winning. That is, the princesses, the princes, and the gorillas that keep on winning from an important and emerging trend. Take, for example, the BetaShares NDQ ETF. NDQ is just the NASDAQ 100. So you get companies like Amazon, Microsoft, and these types of businesses, all at the top of the ETF. But you also get other businesses that are slowly and surely creeping up the list. Even names like my favorite, Costco, which is using digital tools to make its in-store experience even better and benefiting ultimately from more productivity through AI. You can also take a really broad-based approach and use something like the S&P 500 ETF from iShares that trades under the ticker symbol IVV. In a similar vein, this ETF just takes the top 500 companies and you do benefit. But how about if you want it to be a little bit more targeted and you maybe want either a satellite exposure or more of a tactical exposure in your core? One of the ETFs that you can use to do that is the FANG Plus ETF from GlobalX. It trades under the ticker symbol FANG. There's also a currency hedged version if you don't want the US currency exposure. This ETF includes all of the big mega cap companies, or the Mag 7 companies, even including companies such as Facebook, which we haven't really mentioned that much, but is definitely benefiting from AI. Through this ETF, you can get a punchy, targeted exposure to the world's leading companies in cloud computing, AI, and technology more broadly. If you want to dive right down deep into something like semiconductors, you can use an ETF like the GlobalX Semi ETF. That's SEMI. This is, as probably I characterize it, more on the risk curve. So you're going to be taking more risk, but getting exposure to the companies that are specifically focused on semiconductor manufacturing and adjacent industries. You can also use an ETF like BetaShares Global Robotics and Technology ETF. In a similar way, but a bit more broader, you get global robotics and technology companies all bundled into one. Let's imagine, finally, that you want to play the ETF and AI kind of interplay, but you don't want to go all in on AI because you might have some exposure to that already. One of the kind of adverse consequences of this $1 trillion opportunity is actually cybersecurity threats. Scammers, hackers, impersonators, and people looking to kind of take us all for a ride are using AI tools to their own advantage. That's where companies like CrowdStrike and Palo Alto Networks actually step in and can support businesses and enterprises right around the world. To invest in those types of companies, you can use an ETF like BetaShares Cybersecurity ETF, or HACK, it's HACK. This is an ETF that, while not directly involved in AI, does have a significant exposure via kind of the secondary industry which is being created as a result of AI. Of course, there are a lot of risks when it comes to investing in AI ETFs, AI stocks, or just anything in general. We could be in the midst of a big hype cycle. Things are getting over the top. So, as with all things, be sure to understand your level of risk tolerance and how you want to construct your portfolio. Remember, at Rask, We have a very simple philosophy of your core and your satellite. The satellites go around the outside of your kind of meaty and diversified core. That's where all the boring, low-cost stuff goes. And if you're more adventurous, you might want to put 10 or 20% in a smattering of satellite exposures, which may include specific AI exposures. If you're new to investing, we always advocate for the core first, then the satellites, not the other way around, because that is how you will ultimately get a lot of long-term return investing, not just in stock markets, but all markets around the world. You can head to the Rask website, just Google Rask Invest, to find out what we're holding in our portfolios as a good base for what you might want to see in a core portfolio. As we sit here today, the world is going to be changed by AI. I'm more excited than ever before. I was first a bit skeptical. Now I'm fully convinced that this is the most important technology that we may see in a generation. So I'm sitting here today thinking that I definitely want exposure to this wonderfully important and emerging trend. There are some fast movers and early leaders in various industries that we've outlined today, as well as some mega caps that are really dominating headlines. I don't think there's one right answer to this, but I think for long-term investors looking to get that growth through productivity enhancements or even just new technologies that we haven't even thought of yet, I think you've got to have some exposure to AI. You can do that through low-cost core ETFs. You can do it through thematic or sector-based ETFs, or you can do it through individual stocks. Just keep your wits about you. Keep your eye on the horizon. Remember, this will be a volatile ride with lots of ups and downs, and don't overextend yourself into more speculative types of investments because there are a lot of buzzwords and a lot of hype getting around. Thanks for tuning in to this episode and overview of the AI market. And if you haven't already picked up yourself a copy of this book, The Guerrilla Game, Investing in High Technology, I think this book would pay for itself 100 times over if you are serious about investing in high technology companies for decades to come. Thanks for watching this episode of the podcast. If you want to hear more from us, you can get daily videos and podcasts on Rask's YouTube channel, or if you want to enroll in a free course on investing, property, business, money, you name it, you can join over 34,000 other students and enroll in a free course on the Rask website. Simply head to www.rask.com.au and follow the prompts. Thanks for watching this Rask podcast.